This again, the probabilities for a cut in the July meeting has been pushed out to September. So this is another piece of information here. The current crude oil prices have pushed the rate cut expectations from June all the way out into September. And that push out into September has created an environment where the dollar is increasing in value, and it is strengthening. It's been strengthening all year. But just recently, the middle of last week, we started to see a negative correlation come out inside of the relationship with the indices. And that's when we had this big sell-off from a 50% retracement short from our highs to lows. And I want to take you back to that setup here for a moment and just ask the question, do you see anything that you recognize? Let's go back to last week's traditional short. This is what it looked like. We were consolidating for an afternoon on Wednesday into a Thursday morning, and then at 10 o'clock a.m. Eastern Standard Time, we started tanking away from those levels. So by Monday this week, we'd completed a profit target. There was nowhere else left to go. We broke an extension, which meant that we had a counter trend squeeze into resistance. That's what Monday's support level was. And then we squeezed right into the next version of this. And the question I have is, do you see anything that you recognize? In a similar situation to Wednesday going into Thursday. That's what we were watching here as we were going into our afternoon yesterday. Now, it is true that the extension long levels haven't broken. They haven't broken. But we also haven't pierced the 50% short from highs to lows. And this is where the battle over the trend is going to take place. When we go down to the smaller time frames here, what you will notice is that the 50% short that we had going into our afternoon, our overnight time frames, has completed its profit target. That's what the low is down here. And it's squeezing us into the direction of the gap fill, which has a very high probability today. Gap fill statistics on Wednesdays are 76%. They're tied with the best day to anticipate a gap fill. 78%, they are the best day over the last 90 days to anticipate a gap fill. 83%, again, tied for the best day to anticipate a gap fill over the last 30 days. We also have in the 92% probability, 92% of our half gap fills have filled on Wednesdays over the last 180 days. The stock market in 90% probabilities, there's not many of those that are measurable. So when you get to the 20 handle, the gap fills above you, that's why we're squeezing into these levels coming out of these, 9 o'clock time frames. The big question as we move forward is this: in the next traditional short setup, what will win the battle over this trend? Will it be the extension long levels that have not failed to confirm our resistance above? Or will the 50% short from highs defend? And to answer that question, we can use our leading indicators in the form of DXY. Now, DXY is strengthening here, and that strength would drag the indices down. But what happens if DXY is stick saved here and it sells off from its resistance? Indice rally. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.